Meantime, Lululemon losing its grip today. It's sliding to a more than 52-week low. The athleisure brand has dropped more than 37% year to date and shares down another 2.5% after hours. This after the company said its chief product officer has resigned and will leave the company later this month. Our next guest says the company could crash as soon as next year. Let's bring in Jefferies' Randy Konik. Randy, great to have you with us. That doesn't sound good when the chief product officer quits. What do you make of that news?
Look, it's clear that the company's running into product problems, and it's clear that the company's running into competition issues. So this company, it's super simple. It has 4 issues. It has a category that's slowing. It has a competition that is rising. It has fashion shifts that are not going towards the company from a fashion perspective. We're moving from skinny bottoms to wide leg bottoms. And then finally, you have the law of large numbers. This is a $10 billion revenue company. And with competition from Alo and Vuori, it's going to be hard for this company to keep growing.
I mean, in terms of the fashion part of it, since the product officer resigned, I mean, OK, so wide leg bottoms, can't you just make wide leg pants? I mean, why is this that difficult? They're not locked into leggings forever. They do have wider leg pants at this point. Has Lulu just sort of lost its appeal?
Look, if you go back a decade ago, about 80% of the company's sales came from its legging product. So when you think of the word leggings, you think of Lululemon. And when the bottoms category is shifting to wide leg for the first time in a decade, this is a decade, it creates a massive headwind for the company if it's not known for that particular product category. So, when everybody wants the Lululemon legging, when leggings are in style, they're able to gain market share against competition. But when the actual fashion trend moves away from that to a wide leg product, the consumer doesn't necessarily have to go to Lulu, doesn't think of Lulu for that particular product, and they have the idea of potentially substituting for another brand, a potentially cheaper brand, to get that same look, if you will.
It's Karen. Thanks for being on. So you talked about a number of micro problems and macro problems, and you're way below the street in terms of earnings. What is the biggest problem there? Is it athleisure has sort of run its course and now it's just going to be more difficult for them? Or do you think it's one of those other, is it Alo, is it Vuori, what is that puts you so far below the street?
Look, it's both. It's very simple. The street thinks that Lululemon's going to grow double digits into perpetuity. We think that Lululemon's U.S. business is going to turn negative next year for the first time ever. And why is that? Well, number one, the athleisure category used to grow at a mid to high single-digit rate before COVID, grew to a double-digit rate post-COVID. Now, after COVID, you have that COVID hangover, if you will, and that's creating a slowing in the growth rate for the backdrop of the industry. In addition, you have companies like, as I said earlier, Alo and Vuori. You're seeing it all over the place in terms of big cities. They're gaining market share, particularly Alo, in a big, fast manner. So that's creating an additional headwind. And I think what the street is missing is they're not projecting U.S. sales to go negative next year. We are. That's why we're massively below the street. And when you look at our numbers, we're projecting overall growth for the company of 4% next year. That incorporates U.S. Turning negative, international still staying positive. But the street expects the U.S. business to stay positive and international growth to grow more than 40%. So the total growth rate for the company by the consensus is over 11% growth for 2025. We just think that doesn't happen.
Your price target is 240. The downside target is 150, which is quite different. So I'm wondering, in that sort of scenario, is it a macro, the economy tanks, or is it going to be Lulu specific still?
It's an earnings go down and multiples compress. We've seen this in all types of companies. You know how it works. When the momentum leaves, so does the multiple, and earnings tend to go down with sales slowing, expenses deleverage, and margins compress. So, what we're saying is next year the company earns $12 in earnings. The street's saying 16. Slap a 20 on 12. That's $240. The market cap on that is still $30 billion. So it's not like we're expecting this company to shrink to an Under Armour type of market cap of $3 billion. We're still thinking it's $30 billion. That's the base case. But if the consumer in the United States continues to slow or slows further, if they start to go to the competitors, then you're looking at massive multiple compression, $150 stock price on the downside. Again, that's still a $20 billion market cap, and still something that we can expect to see is a real, I think, relatively conservative assumption for Lululemon going forward.